Alright, so I'm buying $25,000 worth of Nintendo this month. So far I got 24,000 and change, but in the next couple of days that'll be 25. So Nintendo's already a mid-sized position to me, and if there were options available that I could trade on it, I would, and that's something I've done with Coupang. I think it's really cheap, and I've bought long-term options on it that I know will pay off. But there are no options on Nintendo that I can buy, or calls or puts that I can sell. So I think the only way to play this is to buy the actual shares. And even though I'm fully invested, and I did manage to sell a few things to free up some cash to buy $25,000 worth of Nintendo this month. So here's what I'm looking at. Here's a 5-year chart of Nintendo, and as you can see, it's been pretty flat, and then it just shot up last year up to almost 25, and now it's down 50% off its all-time high. And if you go to the all-time chart, you'll see that actually from like 2011 until recently, it's kind of gone nowhere, traded sideways, and then shot up a lot in the past couple of years, and now it's down 50% from its all-time high. So what's going on there? Part of it is the nonsense that's going on with the current administration. They were worries about the tariffs affecting the console prices, but now they will get that money back, so that should help. But there's a couple of headwinds. One is what's going on with chip prices because of the AI craze, and all companies like NVIDIA buying up data centers and taking every chip available, and that's doubled or tripled a lot of the chip prices. And so there's concern that that'll affect the price of the consoles and affect the bottom line for Nintendo. I think that's kind of overblown because the Nintendo Switch was already launched, and the prices are already, and for those consoles that are already sold, those chips are already paid for. And even if the price of chips doubles or triples, that doesn't mean that the price of the Switch will double or triple, because the price of the console is not directly related to the price of the chips. Most of the price of that console is the intellectual property, the employees, the designers, everything that you had to get that ready for production, and then the final cost, the chips is as part of it, as is the case and the other things. But most of that cost is not reflected in the price of the chip. It's reflected in the price of the intellectual property. And now that people own those switches, they will be buying software for them, games, and those are very high margin. And as I mentioned in other videos, they are having 6 Nintendo theme parks built out for them, and they're not putting up any money, but they will get a percentage of the gate. So that's a future revenue driver. There was some concern that the Mario 2 movie that came out would not do well. Turns out it's breaking box office records. It's doing really well. So I think there's a lot of fear that's baked into this price that is unwarranted, and I think it'll do really well. So that's why I backed up the truck on this. So I did start buying around here. Took a while to pay off, and then it doubled, and now it's just unbelievably cheap again, according to my opinion. And this isn't investing advice. I'm not telling you how to invest. I'm just walking through my process, and everything here is for educational, informational purposes only. So make your own decisions, but I'm just walking through what I see. So the complaint that the Switch was going to be overpriced, that no one was going to buy it because of the tariffs, even after the tariffs, which again they'll get some money back for that, it was $450 when it was released, and people were saying that was way too expensive. But here's the price of other consoles that they've released, and in inflation-adjusted dollars, it's right in the middle. So the NES was $179 when it was released, but in inflation-adjusted dollars, that would be $523. So the Switch was $450. That's less than that. It's slightly more than the original Switch, but $450. I feel like that's a great value for what you're getting. So Nintendo did announce that they would be raising some prices because of inflation and the chip prices and things like that. So here's a breakdown of the increases. So the Switch base model, which is the one before the Switch 2 that was just released, that's going from $299 to $339, 13% increase. The OLED from $349 to $399, that's a 14% increase. So sure, they are raising prices, but they're not an outrageous amount when you think of the price of other things that have gone up that you're spending money on, like groceries. Those have really gone through the roof. So a 10 to 14% increase in the price of an electronic good, I don't think that's too much to ask. So again, Switch 2 is a new console. The other one, sales of software were declining, and the sales of the controller were declining because it had been released so long ago. But with the new controller, that should drive software sales. The movies, Mario 2, which is breaking records, Legend of Zelda, which has not been released yet, and the 6 amusement parks that are being paid for by somebody else, and Nintendo gets a cut. You're getting a lot of value there, and you're getting this at a price that you haven't seen in a few years. So you're getting another bite at the apple. When it went up to 25, people said it was too late, you missed it, but now you're getting a chance to get in at the earlier price again. They did announce a buyback, which should also help share prices. And besides the very valuable Nintendo IP, I mentioned in another video that they own one of the most valuable franchises, which is Pokémon. They don't own the whole thing, and if you ask anyone how much they own, even analysts, they can't give you a straight answer, but it's somewhere between 33 and 50%. Why is that? Well, there's 3 companies that own the Pokémon intellectual property, and Nintendo is one of them, but Nintendo also is an investor in one of the other 2, and they've invested at different times, different amounts of money, but it's unclear what ownership they got for those investments. So if they owned 100% of that, then they would own 2/3, which is 66%. If they own 0%, it would be 33%. So it's somewhere between 33 and 66%. So let's call it 50% of the Pokemon IP, and also some of that is broken down differently with regards to how much each of the 3 gets with regard to software versus video versus movies. So it's complicated, but they own a lot of Pokemon. And so 25,000 is a lot for me, but I feel like it's gotten cheap enough that I'm willing to add to that. It was already a mid-sized position. I think it was a 5% position for me, and I don't know what it'll be after this, but I have enough faith in it that I'm not worried about it. So besides having very valuable IP and very interesting things in the pipeline, like the theme parks and movies and video games coming out, they also have a ton of cash on the balance sheet. So the price you're paying in terms of PE is not that accurate, because this looks like 24, but if you back out the cash, it's probably more like 18. Probably more like 18, and I think this has the potential to be. I think this has potential to be the next Disney. So again, I'm not telling you what to do with your money. This is just me talking through my process and why I decided to invest $25,000 this year in this. So let me know what your comments are, and if you have any questions. Another reason this has been sold off is the SaaS apocalypse. So there's a fear that AI is going to disrupt most of the software companies, and so many companies have been cut in half, like Oracle and Adobe and Constellation, and Nintendo is technically a software company, so part of that is probably reflected in the current stock price. But anyway, let me know what your thoughts are, and like and subscribe so you'll see future videos like this. Have a great day, everyone.